ITR filing for NRIs, why it shouldn't be ignored. A common question on the mind of every non-resident Indian NRI is, am I required to file an income tax return, ITR, in India? To answer this, we must understand three key aspects. When ITR filing is mandatory for NRIs, what are the consequences of not filing? Why filing an ITR is beneficial, even if no tax is payable. Global taxation principles and NRIs. Taxation worldwide generally follows the residency principle. Residents are taxed on their global income. Non-residents are taxed only on income earned or received in the source country. Therefore, NRIs are liable to pay tax in India only on income sourced from India, such as interest on NRO accounts, rental income from property, capital gains from Indian assets, dividends from Indian companies. When is ITR filing mandatory for NRIs? As per Indian tax laws, filing of an ITR is mandatory for NRIs if total Indian income exceeds 2.5 lakh rupees in a financial year. Aggregate deposits in bank accounts exceed 50 lakh rupees during the year. Total TDS or TCS exceeds 25,000 rupees in a financial year, 50,000 rupees for senior citizens. TDS obligations on payments to NRIs. Under the Indian Income Tax Act, any person making a payment to a non-resident is required to deduct tax at source, TDS, and deposit it with the government irrespective of whether the recipient's income is taxable. This means that banks deduct TDS on NRO account interest, even if the interest earned is below the basic exemption limit. NRIs are often subject to higher TDS rates. Why you should file your ITR in India? White heavy check mark to claim TDS refunds. Excess TDS is quite common for NRIs. The only way to claim a refund of this deduction is by filing a return of income. White heavy check mark to avoid penalties and notices. Even if there is no additional tax liability, non-filing can attract scrutiny. Notices from the tax department can lead to litigation, unnecessary stress, and added costs. Also note that in cases where incorrect or no TDS is deducted, both the payer and the NRI may be penalized. White heavy check mark to carry forward losses. Filing an ITR allows NRIs to carry forward losses, example, from stock trading or mutual funds, for up to 8 years to offset against future gains, potentially saving significant tax in the future. For global tax compliance. As tax residents of another country, NRIs may be required to report their global income. A filed ITR in India provides documented evidence of Indian income and taxes paid, useful when claiming foreign tax credits, avoiding double taxation, justifying the source of remittances or investments abroad. In conclusion, even when not mandatory, filing your Indian tax return is a wise financial and legal decision. You can recover excess TDS. Stay compliant with Indian and international tax laws. Protect yourself from future tax complications. Preserve tax benefits for future use. Don't lose your hard-earned money to unnecessary TDS deductions. File your ITR in India, stay compliant, and safeguard your financial interests.